All right, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it this week here. So, bit of a whipsaw week for the most part, but a lot to unpack. So we did have the CPI numbers on Wednesday and PPI on Thursday, and we had some interesting price action. Both those numbers came in a little hotter than expected. So CPI coming in, it was just 0.1% hotter than expected. So it wasn't like a huge beat, but it was hotter nonetheless. And that represents the first, actually really the second increase in a row, month over month and year over year. And PPI on Thursday came in at I think it was like 0.3 or 0.4% hotter than expected. These are big. This is a big deal. This is kind of confirming what we've been talking about for a long time now, which is that this type of inflation is going to be sticky. So it's kind of easy to get from 9 down to 3%, but getting from 3 down to 2 to 1 to 0 is very difficult, especially when it's what I believe are secular inflationary pressures that we're looking at here. And that's something that can spook the market a little bit. Now, initially we didn't sell off, right? So Thursday we actually had a pretty good rally, and you can see we went up right into this trend line. So this is Thursday, right after PPI was released. Why did the market not sell off there? To me, a lot of it had to do with quarterly OPEX. So we had quarterly options X for the SPX Friday morning, and then of course for the spiders and everything else on at 4 p.m. on Friday. And a lot of the time, these institutions, they kind of play some games, and you'll see a lot of things that don't make sense. For instance, the dollar index was ripping higher on Thursday, as was yields, and the market didn't seem too bothered. But on Friday, we got a pretty good sell-off here, and if we look at the spiders, instead of the SPX, look at the SP spider, we sold off in pretty heavy volume. Now, it is very common for a quarterly OPEX to have increase in volume like that. Also, keep in mind the SPY paid a dividend there. That's why I've got the SPX on. But nonetheless, pretty good sell-off. It's kind of an old adage, sell Rosh Hashanah by Yom Kippur. Could be a thing. But for the bears, you got to see some follow-through going into next week. So that's what I'm looking at. And really, like I've said for the last week or two, the big level to me on the SPX is this area right here. So this green bar low, if you can get a daily chart close below that, that would definitely open the door for more downside. And I think the bears have to break that sometime next week. And we do have the Fed coming up, so don't forget about that. They are not expected to hike. I am wondering, though, there's now speculation that maybe they leak something to the Wall Street Journal, because they're not gonna surprise hike. So if they're gonna do that, it's gonna come via a leak. But the UCB did a surprise hike last week, so there's that as well. But I mean, Jerome Powell doesn't seem to be. He seems to telegraph everything he does, so we'll keep an eye on that. But as of right now, they're not expected to hike anything. But for me, really all it comes down to, though, is this level here. You get a daily close below that on the SPX, and that definitely opens the door for more downside. If we can break above this upsloping trend line, then we can have some, a possible move up to 45.50, which is right here with this gap window, and then, of course, that double top area. So those are the levels that I'm watching and looking at going into next week here, and we'll see if the market can remain. We've been under pressure since August. We've had a nice little rebound, but now it's time for the bears to prove it. If they're going to make a move down, first step is getting below this on a daily close, and then we'll look at that 100 moving average and possibly even this trend line, which coincides with that 200 moving average, as well as if we flip the charts back here, you can see this pivot here and this breakout area. So that could be the ultimate destination if the bears can make a move, but I believe they have to do it kind of soon if they're going to do it. Anyways, let's look at the triple Qs here. So again, that got hit pretty good on Friday, down 1.71%, right into this trend line here. And again, pretty simple. Bears need to break that. You will have support at the 100 moving average as well as this purple trend line. If that breaks, there's a pretty sizable air pocket, down to that 330 handle. You get the 200 moving average, but again, one thing at a time here. On the upside, resistance is still 380. If you can get through that, then the Qs can go higher. Russell 2000 here kind of teetering a little bit. Possible head and shoulder look, right? So left shoulder head, right shoulder. And we did come down and consolidate here. So this is, this is vulnerable, I would say. Fed comes out and it gets hawkish on Wednesday. This could break and could take you down to that gap there around 175, 176 on the IWM. So watch for that pattern there on the Russell 2000. But again, you need to close below that neckline in order to trigger it. Dow here, not a whole lot going on via the DIA. Again, still just stuck in a range, 340, 350 to 350. You get above that, you can go to 355. Below that, and you lose this pivot, then there's not a lot of support here on the diamond all the way down to 331 and change. So just be aware of that. Semiconductors here down 3% on Friday. I think that needs to test this trend line. It's not that far away here. You do have the 100 moving average. And again, much like the Dow there with this pivot here, if we lose that, there is a big air pocket, right? So all the way down to, that 129 area on the Dow, and you can even say it kind of coincides with that area on the triple Qs here. So this low, and there's your air pocket. And by the way, that was the NVIDIA gap, if you're wondering. So right there, all the way to May 24th, NVIDIA got to hold that 400 level. But semiconductors, that's what I'm watching here. This pivot goes, it's problematic for the SMA, especially on a weekly close. IGV finally pulling back a little bit. This had a nice move all the way up to that 367 handle, pulled back here, closed below that pivot high. So a little bit of sign of weakness there, nothing crazy. Still has a lot of support down here around 340 if it were to come down there. And again, like I said, we never tested this trend line here. I would have liked to seen that. So that upsloping weekly trend line going back to the beginning of the year never quite got tested. So we'll see if if we get a bear move, that could be something to watch, to be in play. And then this pivot here is kind of similar to the ones I just showed you. That one's got to hold. Otherwise, you're down to 310 kind of area there on the IGV. But again, still a very strong sector as of right now. Oracle and Adobe did have earnings. Oracle got hit pretty hard, and Adobe came off the highs as well. So bringing cloud down a little bit there. Transports still remain weak here via the DJT. Again, much like this we had this big down move, bear flag. We called this in the video here, and then continuation down. And we're kind of just, it's kind of a dead cat bounce, right? We're not seeing like a V shape off of this 100 moving average. So again, if this continues sideways here, this can have one more slice down to that 14,800 area. That was your breakout level. So I'd expect that to be support on the downside. There's also the 200 moving average in that range. If we really start to go down, we could look at this trend line here, and that coincides with that 14,000 area. But again, we're not there yet, so we won't get too ahead of ourselves. At least not right now. All right, so let's flip over here to interest rates. So the 2-year yield, starting off with that as always. Again, closing above 5.03 on a weekly, so a Friday weekly close. That is significant to me. And again, if this continues higher, it's going to put pressure on the market. This could be, if you're looking for a catalyst for the bears, this could be it. If you break above these pivots here and you get towards that effective Fed funds rate around 5.33, the market is not going to like that. So that's where that's where the Fed funds rate needs to be. It needs to be ahead of the 2-year yield. And if it doesn't happen, that means the Fed's behind the 8 ball again. And the whole narrative about them stopping hiking is going to fall apart essentially. But the 2-year, the yields look strong here to me. So again, not good for markets. Again, look at the 5-year. That's a nice looking kind of cup and handle pattern. Same thing on the 10-year. This is knocking on the door, as is the 30. So again, yields are showing me a lot of strength here. I know there's lots of talk about we're going back to ZERP, we're going back to QE, but the yield charts are telling me that's not happening right now. So just be aware of that. Maybe a little bit priced in going into the Fed, so it'd be kind of hard to break. I think it would be kind of hard for these to break out right now, but as far as the charts are concerned, I don't see any problems with them. So anyways, let's get over to housing here, and XHB actually came in a little bit this week, so pretty good continuation. We had the down move a week or two ago inside bar, and then a continuation down. Still a lot of support at 78. If we break that on a weekly close, especially on this pivot, you'll have some support with this big trend line, and then the big level will be around 72, 73 there for the XHG. So finally, a little bit of damage here on the home builders. Is it finally starting to come back to reality? Well, that remains to be seen. They've held up really well for a long time. Starting to see some momentum decline here. Again, we got to get through these levels here first before we can get excited about any sort of correction there. But XHB did come in. VNQ, kind of a nothing burger this week. Still looking at about 84 on the upside and 78 on the downside. XLF in okay shape. It was up 0.5% on Friday, but some of these, bank ETFs that don't include Berkshire, KBE, I do not like that pattern. I do not like KRE either. Again, similar kind of bear flag, down move, sideways to up. I think that needs to test the low 40s there. May do it sometime next week as well. Broker dealers here, those are holding up okay. If that consolidates, you can get through 510 and go back to 520. All right, let's flip over here to commodities. Let's start off with crude as always. Again, just doesn't want to go down, right? So continuing higher here. We consolidated a little bit last week and then just really took off. This is getting a little rich here in the near term, right? A month or two ago, everybody was talking about demand destruction. We're going down, and now I'm hearing $120, $125. So, and I do think those eventually do get hit. But just near to medium term, I can't chase this here, right? So you just had a huge thrust from 77.50 in 3 weeks, August 24th, 77.50, and we're at 90, 91 and change. We closed above 91. But this is the power of these patterns. I hammered this in these videos for how many months now? I said, you get above 83.53 on a weekly close, it's going higher. It's going to squeeze, right? That's what I told you. Should go to the low to mid 90s, and we're almost there now, right? So we're in 91.20. I think this can get up to 93, 94, 95. At that point, there's a absolute wall of resistance. So just be aware of that. That doesn't mean it can't consolidate and go through that. But I think, risk reward here starting to favor it's, getting a little lofty here, needs to pull back, needs to have a correction. But again, this is what squeezes do, right? So that's why I kept saying that for weeks and weeks and months and months. If you get above these levels, you're going to squeeze. So crude continuing to power up. XLE also having a decent, we did pull back in on Friday. I think that's options X related. I don't see any reason why that can't go pierce double top. XOP holding up as well. That looks like it's just consolidating for a move to double top. And OIH here continues to hold up. So, basically tested that 100-month moving average. So we got very close to it. And slightly pulling back here, but it's holding up. Again, still a little, still a little rich here in the short term. I think it needs to do some bigger, corrective moves, but it's holding up for now. And again, OIH remains strong. Another sector remaining strong at CCJ, although Friday that may be a topping candle. So last week I told you I just don't favor risk reward here opening a fresh long. And we did end up punching up 1, 2, 3, 4 days in a row, but that is a pretty good shooting star there with decent volume. So maybe a short-term topping signal. If you're a hodler of this, you'll be fine. If you're trading it, trail your stop. That's what I'll say about this. Again, going into this big pivot here from 2011. Beautiful pattern, though. We talked about this pattern a lot, right? You're in this wedge, you're consolidating to go higher, right? So we called this out, and nice breakout just right now, very stretched, and that is a good reversal candle there, so just be aware of that. URNM, same exact look there. If we look on the weekly, you can see we just blew through this pivot, and now we're into this red bar here. Maybe it can go a little bit higher, but again, it's still going into a wall, so just be aware of that. If you're hodling it, it's fine, but if you're trading it, trail your stop if you're long and take profits. That's what I would do here. Nat gas hanging in there this week, had a little bit of a pop on Tuesday and then pulled back again. I'm kind of watching this pattern. Obviously we're watching the ascending triangle look, which does suggest a breakout at some point here if we continue to hold this base and push up on that $3 handle. But short term, I'm watching this little wedge here as well. So as long as we're inside of this, if you can break up, then you can hit again, you'll have the resistance around 286. I've talked about that before. The big level is 3. If this can get through 3, that's when I think the moonshot can happen. But these commodities go on their own time, and it's putting in a big base here. So I believe there is more strikes. I didn't even talk about the UAW strikes, but there are strikes now going on in Australia with the Chevron LNG facilities too. So we'll see if that starts to reflect here in some of the storage numbers. But nat gas holding up and still maintaining that pattern there. Dollar index continues to act well, pushing up towards that 106 handle. I think it gets there. 106, 106.50. Maybe we have a blow-off move on the Fed here in the near term. The dollar is getting a little stretched, but there's no real problems with it. So when I say stretched, I mean more on the weekly. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. But again, I said this just like crude. I said, you close above this red bar, it's going to squeeze, and that's what it does. So that's the power of these chart signals. And yeah, what can you say? It's held up well. 106 should be the next level. 106.50. When you get there is a lot of resistance. So just be aware of that on the DXY. But right now, it is holding up nicely. Gold here, also holding up nicely. What impresses me right now about gold is the dollar's ripping, right? And gold's just kind of wedging here inside of this wedge pattern. I still think it needs to go test 1900. That's just my kind of general lean right now, especially if the dollar really pushes up to 106.50. But right now it's holding up, and that's despite a strong dollar. So seeing rotation to gold, maybe a sign of risk off here. Additionally, another thing to keep an eye on too, before I forget, look at XLU. That's really outperformed the SPY last couple of weeks. This is what you want to see as a bear, honestly. You want to see XLU lead the market with tech lagging. That is a risk off signal, so just keep that in mind. But gold holding up well. I talked about this with Jason on Twitter the other day, and you can make a case that sometimes you get an inverse relationship with gold to oil. So if we look at 2020, obviously we had that crash. That was a little unrelated. You had a lot of, obviously, the economy getting shut down and QE happening, a lot of bond buying, so that made sense. But sometimes it does look like post-2011 area, you get those kind of situations where gold and oil sort of take turns. Right now you're seeing oil really rip higher and gold not do a whole lot. Is that something that's happening right now? It's certainly possible, so it could be something to keep an eye on there. And as Jason said there, you can see Saudis and OPEC use oil profits after a big rally to add tonnage, so it could be some type of rotation. Maybe if oil starts to top out around 95, gold could rally. Something to keep an eye on there and just chew on. But right now, inside of that range, if you break above it, 2,000 is your area to watch on the upside. And downside levels have not changed either. Silver getting a nice pop on Friday, though it did come off the highs. I still think that needs to go test 21, but again, still just in a range here the last couple of months. Platinum, nice little pop there. I still think that wants to go down to that 850 area, but that did get a little bit of a bid here. Palladium not doing a whole lot. Again, I'm not talking about that until we break out of this range. Then copper did have a decent little pop this week. A little consolidation. This can get to 390 here in the near term, and we'll just leave it at that for now. All right, lastly, over to Bitcoin. So again, Bitcoin actually had a decent little bid here. So it tried to, again, I talked about this a lot. We had a lot of these fake outs, right? We had this nice bullish pattern that failed. We came down, we had a bear pattern that failed, and then the bull move failed 2 days later. And then we tried to break down last Monday, and then it got reversed. So I don't trust, this market is very illiquid right now, by the way. So the crypto market is very illiquid, and that's why we're seeing these moves, right? Because you get a big move, or it doesn't take a lot of capital to move the market when it's not liquid. And it can be played around with very easily by institutions. So big picture though, short term we'll give it the upside bias to 27.5, 28, because you did have a nice move there off the lows. But big picture, that's a weekly inside bar. So be aware of that. If this base is here for a little longer, it can go to 21.5. At that point, I would be interested in a long. But that's really all I have for you on Bitcoin right now. Just be careful that it's very liquid or very illiquid here. So anyways, guys, just really quick to wrap up, spiders, or SPX rather, above this area at 44.50. Below this area, at least to the 100 moving average, there is also a gap fill, possibly lower. Again, FOMC this week, so keep that on your radar and watch those utilities too. XLU, they continue to outperform the spider. They continue to outperform tech. Could be a signal of risk off, but again, just something to keep an eye on there. But those are the levels we're watching this week. be careful treading around that FOMC statement. Anyways, guys, can wrap up here. You guys take care. Come find Jason on Patreon. Come find me on ConorWarTrades.com. I'll talk to you guys all next week.